Well, good afternoon, everyone. Shooter Scott Henderson, and we're going to go over swing trade notes. Of course, at the end of our presentation, please do review our disclosure. We are going over swing trade notes for September 15th through 19th. It's now September, 14th? Yes, it's about 3:30 in the afternoon. Got to this a little bit early because it's too freaking hot outside. One thing about Texas summers, you got to do it in the morning or you bake. Yeah, that's for sure. All right, so we had basically 5 green days in a row. Our leader was XLK. I want to jump to sectors for a second because something really caught my attention. We got a bid on consumer staples a little bit, consumer discretionary, and utility. So that shows us we have a little flight to safety. Now, that said, we've been there before. Heat map really had some nice winners here. Oracle, now since given most of it or half of it back, I mean, we're 292, I think, from I think it was 360. I didn't even look after it hit above 340 because I didn't want to. Tesla got a nice move. Now we're potentially in breakout mode for Tesla. I mean, we could move another $30 to $50 here. It's not in swing trade notes. However, I like it. I'm going to be watching it. I don't know that I'm going to put anything on there because of FOMC this week. And we're getting a bid in some of the alt semis. Look at Micron. Even AMD came back from that dip it had. AVGO, Nvidia came back. So we just see a little green in pretty much, oil, gas, energy, healthcare, just a little bit green, banks, a little bit green. And industrials were the only thing that was really, except for a GEV and ETN. And we got a little bit on HWM as well, but Axon wasn't bad. HX. So the mega AI chip thesis is building out. I think this entire ramp, this was the week that we got to the end of the week, was Oracle based. I mean, going from 18 billion to 144 billion in 4 years. Just imagine all of the support infrastructure going in place to support AI, equal or similar in line to growth rates there. And we're not seeing that printing in other names yet. So we have a lot of sympathy bets, I think, coming. Now, where exactly that is yet, I can't tell you. Maybe by next week I will. Now, UNH, we just popped 11%. I sure hope somebody took that. So my read this week, fresh all-time highs. I don't think how we get it. I think we run right into FOMC. We'll find out on Tuesday, though. If we don't get a decent turnaround Tuesday, then we're going to flush into FOMC. So the meaning is we should be shallow a little bit Monday, would be my thinking, okay? And we ramp on Tuesday into FMC, or we ramp Monday, flush into Tuesday, and then it's a mixed bag into FOMC. That's sort of my take on it. Now, certain names we have clear, digestion as far as pricing, and then we're seeing the impulsive rotation there. So the one thing that I think still continues to lag is staple. Let me just jump to crypto. Bitcoin dominance continues to drop. We're at 56.18. Bitcoin pushed back up about 5% for the week. Ethereum pushed about 8%. Solana about 20%. XRP back to about 10%. Doge came back at 32%. Altcoins on the weekly heat map. MYX is getting a bit. These are AI-driven cryptos. I'm hesitant because it requires a whole nother beach to manage it, and I really, with everything on my plate. However, it's really, we're getting enough FOMO there. Once we get closer, 90 days is when the government's supposed to release their reserves for cryptocurrencies and exactly what's going to be there. That announcement is probably going to be my trigger where I shift a little bit into altcoins. Still up in the air a little bit. Looking at the monthly number, OKB landed, I really liked OKB. For the month, it landed 105. It was up almost 300% at one point. So it's given, still quite a little volatility in these names. So I would suspect that MYX gives a decent bit back in the next couple of weeks and 470. Now I'm going to go back to the Bitcoin dominance for a second. So I think if this is our rally and we're not at resistance and we're not going to pull back to 90, right? Then we continue to grind higher, I think, just as we've done. However, if Bitcoin ramps, I expect altcoin to bleed because everybody's going to start chasing dominance. So that dominance factor is going to be big. So that's something we should be able to watch. If this starts increasing instead of declining, it indicates or is showing that rotation into alts, which right now we're seeing the declining dominance and continued rotation into all. So it's a really simple tell to watch. Just my 2 cents there. We ended up net 827. We adjusted downward. Year to date is about 5.62, so a little over 5.5x for the year. I'm not going to complain with that. We have a decent amount in unrealized gains still. All right, let's look at earnings. I think this is going to be a tell week. It's sort of a slow week because of FOMC. So we got General Mills, Cracker Barrel, Darden Restaurant, right? Then Lennar, and then FedEx. I don't think FedEx beats. I think FedEx guides lower. I think Lennar beat, and I'm mixed on whether they guide lower, right? Sales are softening. I think they have to report something. General Mills is going to tell us how strong grocery, period, all right? That'll be a big tell for where we are. This Cracker Barrel, I think, is toast, which is, I almost never do shorts. I've got a short on Cracker Barrel in this week. The reason being is they did the logo and the company change, and there's 3 to 6 weeks of vacant restaurant, and the consumer hasn't forgiven them yet. It's not a quick fix just to revert back to the original plan. The consumers are going to need to come back. And, when consumers rebel against a chain, it's not necessarily quick. So my thinking is they're going to guide lower. That's just, there's no way they can't. I could be wrong. So the only way to manage that is position size. So I like the September 19th, 47.50 puts, which is tight, roughly a little less than $100 a contract. I think they were 97. You can also push it and go to the October $40 put. They're about 55 a contract, which is where I think we go. I think we go back to the shelf. I think they guide lower and we're here. That's what I think. I think we come right to this number here, 78.6. That's just my thought of the way the tapes reacted. You notice how we got this overshoot here? This plummet down. I don't recall exactly what's there, but this is what I'm looking at. I'm seeing it here. Equality, the shelf is here. So drive 1, Flushing drive 1, Flushing drive 2, Flushing drive 3 is down here. So we could go all the way down to $32 with that. However, we get this kind of an overshoot like we got here. Heck, we could see $16, $12 if this thing's going to go bankrupt. So I kind of like the idea of putting some of those $40 puts on. That's just my thought. Just manage your position size. Don't go too crazy with it. All right, upward. I think we get up and out of here. I think it's a good spot. Starting to get a little bit of a bid. RSI on the daily is not in the best spot. I'd rather it be down to the low side. However, it just looks to me like it's grinding higher. I look at this as mound 1 right here, whole piece right here. So I think we get a mound 2, maybe rolling, which often RSI does as it rolls, as it continues to push. So I'm only looking for about 18 to 18.50. Just a quick low dollar trade. I just like the look versus, how we tested our demand zone down here to the bottom. Just risk is going to be 982 to 1437 is roughly what I would use for the anchors. I like the October 1750 calls are roughly 60 a contract. Mainly is the number of open position sizes and the spread look good. It's just another little piece. Right now in the market where we are frothy and we potentially see a bullback, we want to take names that you have some conviction a little bit more. It's not a big move for us to bank a few bucks next kind of thing. That's really the thought. Now, I also like Macy's for a flush lower. Right at our supply zone, it rejected. We've got our minimum candle requirements break below the 1683. I think it opens up $15 minimum. 618's down around 14. So by the October $16 puts for a little less than $50 a contract. Again, another name. Even if it comes back to $15, we make a couple bucks on it next. But just looking at the history of the tape when we've gotten a push like this in RSI, right? We pushed, what did we do? Came back, right? So we did a flush into the gap. Gap's way the heck down here, right? So that's $14. Then we bounced, then we came back and took out the gap. So, let's just look at, I can't pull the tape over. There is a little bit another gap over here that had a similar outlay. But, whenever we gap, it comes back and tests the gap. Likes to test the gap. Gapped, tested it, broke through it. Gap, tested it, broke through it. Same scenario. Gap, tested it, rejected it, gapped again. So you had both sides of this. So we could literally see a gap down on this. Hopefully it doesn't happen Monday so we can get a piece on. But that's sort of my thought. Kept it very light because of FOMC. So that's what we've got this week, folks. Great trading. Until next time.